Now, dollar trees, right, or dollar stores in general, these stocks get obliterated. Is there an opportunity in these stocks? When you see 55% down year to date, you start kind of saying maybe there's money to be made here, right, in these dollar stores. Here's the deal, right? And by the way, they're just on a long list of these value type stocks that are getting absolutely obliterated, right? Look at this headline here today. Dollar Tree stock tumbles as outlook lowered due to immense pressures. Listen, I can't own a stock like that. No, not when we have all these inflationary pressures we had over the past few years, when the consumer's more conscious about price than they've been probably in 15, 20 years, and yet these companies still can't perform? No. This is not good, okay? Dollar Tree reports their second quarter. Listen, the same store sales for Dollar Tree was up 1.3%. They're getting destroyed by CPI. They can't even keep up with CPI, right? Walmart's having no trouble. Walmart's numbers look good. Why is Walmart putting up very nice numbers and Dollar Tree's not? Why is Walmart stock near all-time highs and Dollar Tree's not? It looks to me like these dollar stores are just getting beat by Walmart, man. It looks like Walmart is taking the lead on these guys and they can't do anything right. And so when I look at them, I want no piece of these stocks, man. No piece at all. They don't interest me, not even remotely. And keep in mind, if their cash flows go down a lot, then they're not going to be able to expand as many stores. They might have to shut down more stores, which is what some of these guys are having to do, which is not a good situation if you have to start shutting down more and more stores. Additionally, the stores you have to put a bunch of money into it. It's a failed value proposition. And then with Amazon keeps getting faster with delivery, it adds even more pressure to these guys, right? Imagine if everything you order on Amazon comes within 24 hours. Imagine if it comes within 6 hours. I'm seeing more and more stuff like come within 24 hours when I order it from Amazon now. And I think it's just a matter of time before they get it down to where Amazon can get a package to your door in a matter of a few hours. I think they're going to get there, and I think it's going to be sooner rather than later. And that hurts these companies immensely, man, immensely. Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Now, NVIDIA, look at this. This is going to be the most ridiculous thing I've seen in a while. NVIDIA did not receive a United States Justice Department subpoena, spokesperson says. Like, this was reported by all the big news outlets and whatnot, and now all of a sudden we're hearing, like, no, it didn't actually happen? What? Every big news outlet said this happened, and all of a sudden now they're saying, no, it actually didn't happen? What? NVIDIA did not receive a United States Justice Department subpoena, a spokesperson said in a statement on Wednesday. Quote, "We have inquired with the United States Department of Justice and have not been subpoenaed. Nonetheless, we are happy to answer any questions regulators have about our business." I'm just like, what? It's crazy. Crazy, right? So, obviously, this is good news for NVIDIA, that they haven't received a subpoena. But there's a risk here, because I understand this looks in it kind of, you might be viewing this and you're like, oh, no subpoena? The stock's going to blast higher tomorrow. It's going to blast higher Friday. It's going to blast higher next week. We put it in the bottom. The Jensen conference Jensen's going to speak at an investor type conference next week. So we could get an a exciting cycle, at least in the short term here, right? That's definitely possible that's going to play out for the next, week or so. But here's the issue. The Justice Department might still subpoena them. It might just come next week, right? So let's say you're trying to think of this as a short-term play. You think I'm going to buy a bunch of call options tomorrow or something like that, right? And then all of a sudden Friday, the subpoena comes, or next week the subpoena comes or something like that. And next thing you know, all the headlines on all the big financial outlets, Reuters and CNBC and Bloomberg is, oh, NVIDIA did get subpoenaed and they're coming after them for this and that. What do you think is going to happen to the stock then, right? So this is a little food for thought in regards to that. I know a lot of people kind of look at this stuff and they think, you're taking a gamble, man. I'm just going to be honest. You're taking a gamble because things could easily, the subpoena could be coming, and the next thing you know, it's like, oh, we missed on this one, right? No, PayPal, Meta, these stocks are starting to significantly outperform the S&P 500. This is over the past month, right? Will this outperformance continue in regards to PayPal, Meta outperforming the S&P 500 significantly? So the way to look at something like this is, where's S&P 500 P trading at right now? We're at about 28 roughly, right? Which is pretty rich, I would say, right? It's not as rich as some time periods in the past, but generally speaking, it's a pretty rich valuation on the S&P 500 right now. And I like to think about, where are these companies trading at P ratio wise, and what type of growth rates do these sorts of companies have, a PayPal and a Meta, versus let's say an average stock in the stock market. And then I like to think about the story. What about the story in regards to these two stocks, a PayPal and a Meta, versus a story for an average stock? Or is it better story? Is it worse story, right? So here's what we're looking at. Remember, the market trades here. So I'm looking at a PayPal, I'm looking at a Meta, both trading significantly under where the market's at. If we look at a trailing 12-month P, 16 on PayPal, 25 on Meta, right? And a 2-year forward P looks pretty darn attractive on both. And so ultimately, we're winning on valuation in a major way, which gives me a lot of confidence these stocks will continue to outperform the market significantly. Secondly, do these stocks have much better growth rates for them than average stock in the stock market, right? Well, the average stock, doesn't usually have the most attractive sorts of growth rates, right? And ultimately, we look at these sorts of stocks, right? Look at like next year earnings per share growth expected, 12% for PayPal. I think they're going to probably do better than that. This is taking analysts into account. 11% for Meta. I think they're going to probably do better than that. But anyways, if we look at an average stock in the market, usually many of these stocks trade at kind of the 8 to 12 range, so we could say around 10. So they have growth rates better than an average stock in the stock market. So they're trading cheaper with better growth rates expected than the average stock in the stock market. And then we can talk about the story. Is the story better with PayPal and Meta than an average stock in the stock market? For Meta, it's extremely easy, of course. Like, it's freaking Meta. It's one of the greatest companies in the world, right? One of the greatest business models in the creation of mankind, to be quite frank. Yes, Meta has a way better story to it than an average stock in the stock market. So that gives me a lot of confidence Meta is going to significantly continue to outperform the S&P 500 for a while here. PayPal. Does PayPal have a better story? It used to not, now it does, right? Now, in between the growth rates this company's been putting up, Chris coming at the company, completely kind of changing the way this company's operating, moving a lot faster. Additionally, when you look at the new kind of data side of that business, right, when it comes to utilizing data for advertisements and marketing and those sorts of things, what that's going to drive for this business overall. When you look at, obviously, Fastlane, what that's doing for the company and the partnerships they're creating there, the story for PayPal, then there's a massive buyback, $5 billion buyback with a low valuation right now. I mean, there's so many exciting things about PayPal that the story is not just better than an average stock in the market. It's like monumentally greater than an average stock in the market. So that's why I look at a PayPal, I look at a Meta, and I'm like, these stocks should significantly, not a small amount, significantly continue to outperform the NASDAQ and the S&P 500 because cheaper valuation, right? Better growth rates and a better story. And ultimately what that ends up to is major outperformance. And so what we've seen recently, I do not think this is the end of it. I think it's just the start of seeing major outperformance from these stocks continuing on in regards to this, right? No, Bath & Body Works. This is a company we spoke about at the top of the video. It's under $30 a share. It just broke 30, right? Not that long ago, it was a $50 plus stock. And this is another one of those value stocks that's been destroyed, right? There's a long dang list of them, and this is just another one. This is another one that could likely face tax loss harvesting at the end of the year, so be aware of that. Stock's down 30+% in the past year. Soaps and candles, how hard could the business model be? Here's the deal with Bath & Body Works. The valuation looks extremely compelling. The business model, you gotta love it. Like soaps and candles and it's beautiful. It's a beautiful business model. You gotta love it, right? The valuation, you gotta love it. Forward P of 9.5, 2-year out forward P of 7.9. Now, remember what I always tell you guys. I did a video on the main channel. It was called, what was it called? 16 years of stock market experience in 52 minutes, right? And what was one of those 85 points I pointed out to you guys? I said, if you ever see a P ratio under 10, get suspicious because that company might, every once in a while you can find one under a 10 and it's like an actual gem. But every once in a while you find one under a 10 and it's actually a trick. and it's not what you think it is. You think it's this incredible opportunity, and it's not actually that, right? So when I look at Bath & Body Works, I do have to get suspicious. The trailing 12-month P there, the forward P, the 2-year forward P, I got to get suspicious. And so I'm a little suspicious of that. Additionally, you look at the revenue growth rates this company has and expected to have, not much. That's not good for the company, certainly, right? But this is the main thing I have a problem with in regards to Bath & Body Works. $500 million roughly of cash in the latest quarter. And we're looking at long-term debt here of a little under $4 billion. So ultimately, they don't have total equity. They have a deficit on this company of $1.7 billion. That's how, kind of rough their balance sheet is overall. I don't like that. And so this is one of those I look at, and I like it, but it has to be unfortunately, it has to be at even a much cheaper valuation because of the balance sheet. If it wasn't for that freaking balance sheet looking like that, I would be like, yeah, let's go, baby. Let's grab some shares. Like literally, if let's say they didn't have debt on the balance sheet, or let's say they had a modest amount. Let's say it was like $1 billion of long-term debt. I would say Bath & Body Works is a buy now. But with about $4 billion of long-term debt and about $500 million cash, even with all the profits this company produces, it would take them so many years to pay down that debt, right? So that's ultimately what will keep me out of the stock unless, if it went under 20 for some reason, it had a much more epic crash and it went under $20 a share, maybe then I'd be willing to take a flyer on this. But, just here, it just doesn't interest me, man. It does not. Now, crude oil, what's going on here? It's down about 20% in the past year, right? Look at this here today. U.S. crude oil inventories dropped more than expected. U.S. crude oil inventories dropped by 7.4 million barrels for the week, ending August 30th, 2024, following a 3.4 million barrel fall in the previous week. It marked the 8th draw in the last 10 weeks and surpassing market expectations. So ultimately, this is like a signal of like, if you want to be bullish about oil, right? Prices should be going up. Like literally, U.S. crude oil inventories dropped 7.4 million barrels. That's bullish for oil price. And yet price is still going down and down and down. Suspect. Ultra suspect. Like incredibly suspect. Okay? No. Now, I was kind of thinking earlier, and I was thinking maybe oil's sniffing out recession, right? Which could be a fair argument to make. But here's the problem. Oil's not a smart market. Oil's not an intelligent market. Certain markets are intelligent. The bond market many times can be looked at as an intelligent market. Gold many times can be looked at as an intelligent asset. The oil market's not a smart market. Look at this. This is back in June 2008. The recession was already well on at that time, and oil just kept going up and up and up, right? It had no clue of sniffing out a recession. And then it set up for the most epic crash we've ever really seen in oil outside of maybe the 2020 crash, right? So, I don't know, man. I think it's manipulated. I'll be honest with you guys. I really think that market is heavily manipulated. And don't be surprised if after the election, regardless of who wins, don't be surprised if oil starts going up after. And now fry everybody's brain because we'll be going into wintertime. And then oil price going up, they're going to be like, what? How's oil price going up in wintertime? Like, suspect. Now, with that being said, everybody out there, you got to keep in mind, you're building your freaking mansion right now, okay? You're building your mansion. So keep building, stay focused. There's going to be a lot of stuff talked about, a lot of everything going on. There's a lot going on, right? We're just leaving earnings season, but there's so much other news and drama going on right now. We're in September now. It's always a dramatic month for the market. October can be drama show as well. We got election coming up here. I ran you through, guys, on this main channel, yesterday or the day before, on everything transpiring over the next 25 trading days. It's a long list of major things that are going to shake this market big time. Through all this volatility you're about to experience, through all this craziness, stay focused on building your mansion, okay? No different than you were building your mansion and it starts snowing out, right? You still got to get stuff done, and it starts raining, and there's a windstorm, and this happens and that happens, right? At the end of the day, you got to keep it focused. You got to keep building your mansion. Looking at your portfolio, that you better be building more shares of the companies you love month after month after month after month, regardless of all the shakiness that's going to go on out there, okay? You're building this mansion. We're going to get the thing finished. It's actually a project that's never finished, by the way. We're always seeking for perfection, but stay focused in this game, guys, okay? And so just want to say that, okay? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in? Or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Alrighty, next one up here. Fed should cut 50 basis points in September.
Joins us now. So given the backdrop and all the new information we've received this week, should the Fed go 50 in September?
Well, that's what we think. We think there's a good case that they should get back to neutral as soon as possible, a neutral policy setting, which, is probably at the highest something like 4%, which is 150 basis points below where they are now. So we think there's a good case for hurrying up in their pace of rate cuts.
On the other hand, services was not too shabby this morning, still an expansion. Jobless claims continue to point to lack of stress in layoffs from corporate America. So 50 might be an overreaction to what is an economy that's clearly softening but not collapsing.
No, I think that's right. If they wait till it's collapsing, I think that's waiting too long. So we think...
Yes, exactly. That's the thing people don't understand. You're seeing every single trend go extremely negative right now, except for the unemployment rate, right? The unemployment rate is ticking up, but it hasn't gotten to scary levels. Listen, people just don't understand anything about economics. The Fed lags. When the Federal Reserve starts raising interest rates or lowering interest rates, there's a 1 to 3 year lag there. And you can look back at every previous cycle and you're going to see there's Fed lags that last 1 to 3 years, whether you're raising rates or whether you're lowering rates. So assuming the Fed's about to start cutting rates, these rate cuts really won't be felt likely until 2026. 2026, that's a long dang time from now. A lot can transpire in the economy in the next year and a half before these first cuts start to actually positively affect the economy, right? And then let's imagine, the Fed's probably not set up in a place where they're going to lower interest rates substantially until what? Probably late next year. Let's say late 2025. You're talking about the real positive effect of lowering all those interest rates won't be felt till 2027 likely. 2027. What can happen to the unemployment rate between now and 2027 if the Fed's far too restrictive and you have an economy that continues to, let's say, weaken over that amount of time? That's why you got to get out in front of this stuff. You can't wait till it's right in front of you. You wait till it's right in front of you, you end up in panic mode. Next thing you know, you're cutting 75 basis points, 100 basis points, 200 basis points, and you got a whole mess to clean up that takes years to clean up, right? We watched that play out in the Great Financial Crisis. The Great Financial Crisis, the Fed started to panic. They lowered rates left and right, in 2008 into the beginning of 2009, down to 0%, which was something a lot of people didn't think the Fed would ever do, go down that low, right, all the way down to 0%. And yet, when did it start positively affecting the economy? You didn't really start to see the positive effects of all that cutting in 2008, 2009, really until like 2011, 2012, right? It was a process. It took years to finally all those cuts that we did years ago is finally starting to help. That's what's important to understand about this, right? And it seems like people sometimes don't get that through their head. And I'm like, dude, you're gonna miss it big. You're gonna miss it big if you're messing around like this.
Case, as I said here, to get ahead of this, any further weakness.
Thank you, sir.
Moving soon seems to us like the right thing to do here.
Mike, how do you do 50 and frame it in a way that minimizes the market's sense of panic? What would that sound like?
Easy. We're far too restrictive right now. We're looking at a CPI that's in the 2s. We're looking at a Fed funds rate that's 5.25 to 5.5, which is we're in far too restrictive a territory, and we need to move considerably in a direction that is more toward neutral. Boom. Is the market going to get scared about that? No. You just laid it out. If they freak out over that, they're clueless. They're clueless if they freak out over that. You're just laying it out. CPI's in the 2s. We're at 5.25, 5.5. We're way too restrictive. We need to start moving in a direction that gets us to neutral, and we feel like a good amount to start moving is 50 basis points at a time. You move 25 and people are like, what are you doing? Why are you scared to move? They move 25, people are going to say, you know what I'm going to say? Why are you scared to move? Well, you're far restrictive right now. There's no concerns at all about inflation, at all. We're not seeing anything in regards to inflation. Outside of insurance, that's it. And that was only because insurance was playing a catch-up game because of how much real estate went up and how much car prices went up, right? Outside of that, you're not seeing the inflationary pressures. The commodities market's not showing you anything. So you got to get moving here, man. You got to get moving to neutral at least ASAP.
So I think Powell's done a good job of explaining so far why they've done the things they've done. And I think if they're moving back to neutral, that's not saying they're panicked. It's saying they want to address both growth and inflation risks more more adroitly.
What is your
So he
sense?
kind of said what I said a little bit, just not as cool.
So the whole, softening versus collapsing, the market has become very obsessed, and as I mentioned, hypersensitive to the idea of a growth scare. How fast do you see this unraveling?
So we don't think things are unraveling, right? We have an unemployment rate that's been drifting higher. We have job growth that's moderating. And that doesn't call for, getting policy rates down to 3 or 2%. But we do think there's no longer a very strong case here to keep policy rates, very restrictive because inflation has, come down quite notably. So the rationale, I think, for staying very restrictive has gotten weaker in recent months. And I think you even saw that as recently as, in the July FOMC meeting. The case was already being made by several participants then for easing policy. So, again, I don't think this is an issue here of the economy collapsing. If it were collapsing...
Exactly. It's not unraveling. It's not collapsing, as he points out here. But could we get to that place 6 months from now, 12 months from now, 18 months from now if the Fed moves far too slow, stays far too restrictive? Absolutely, you could get to that place. That's the major risk, right? It's not that it's happening right now. If it was happening right now, the Fed would be already in panic mode, cutting rates to zero. It's about... all the signals kind of starting to tell you, oh boy, we might have problems ahead if the Fed doesn't get moving here, right?
I think you'd have an argument for going more than 50 at the next FOMC meeting. So I think this is really just getting back on sides.
Yes.
And then, if they have to raise, there's nothing wrong with reversing course. But we think, Chair Powell has, as I said, been a very good communicator, even when they've changed courses, pretty rapidly over the past couple of years. In hindsight, that was, a correct decision when they got, quite a bit more hawkish than they had been. Powell was able to explain that, and I think if they have to do, the opposite right now, I think Powell, as I said, has been a very good communicator, and I think he could, talk the market and talk to the public, more importantly, about why it makes sense to be, in a setting that can address developing risk to either inflation or...
I mean, he really needs to talk to the market. The public's not even going to care. The public's not going to watch what Jerome Powell says. The public has no clue when Jerome Powell's going to talk next or what he's going to say or that he'll even talk or that he'll even lower interest rates. The ones that do care are the ones that care about the market.
On the other hand, they're going to get grief for doing this right before the election, especially if they go on a double. Right. And I know that that doesn't factor. It's all they don't pay attention to that. They do what they have to do. But it's a judgment call here. And also inflation is still above target, Mike. And I know that the signs are increasingly looking like it's coming back down to earth. But they can't be too sure. And they've been wrong before.
Yeah, but the Fed funds rate's massively above their target. Right. So, okay, inflation is a little bit above. The Fed wants to really keep like a neutral rate in the 2s when it comes to Fed funds rate. Right. And right now they're in the 5s. So that's a much bigger difference than where CPI's at.
Yeah, no, that's fair. And there's no guarantee on anything here. But, as Powell has said in the past, if you wait until inflation's already back to 2%, you've probably, waited too long. And so there is some I think, usefulness of having a forecast-based monetary policy. And while inflation's still a little above target, unemployment's probably getting a little above what they, think is consistent with full employment. So right now, as I said, you got risks to both employment and inflation. as I said, you can always reverse course if if it turns out that one of those.
Although
risks
they really
is
don't want to
developing.
do that.
So I like him. I definitely like him. And I love him to read me a bedtime story because he could definitely put me to sleep easy.